Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the Live Trade Room. You're very welcome to join us for what is our trading the US Open fully live and interactive. So over the next hour or two, what you'll experience is how we go through the process in terms of identifying those high probability trades across some of the world's largest markets, from your foreign exchange to commodities and also global indices as well. It's important for us we have a multi-asset class view of these markets. We can identify correlations and look to position ourselves accordingly. So without further ado then, let's start with our risk warning and let's see how much cash we can make. For those of you that are interested in learning how to trade the financial markets, we can absolutely help you on that path. We trade the markets with a high degree of, I suppose, knowledge and understanding about the opportunities that we get into. So we develop a trading idea and then we build out the technical opportunities. We look for levels of support and resistance, and our understanding of Japanese candlesticks allow us to then position ourselves in those markets that we've identified to move in a particular direction. So it is really about being able to plan for these opportunities. We do have a live broadcast every night at 9 o'clock for our members, where we go through each market individually and we identify the higher probability trades for the following day. So it's a great opportunity to be prepared for those moves before they happen, so you know which markets to look at from a trade selection perspective, what direction you'd like to trade those markets, and at what prices we would be looking to get in. So it's quite comprehensive. We hope you'll benefit from it. So up on screen is our risk warning. Just continue to just be mindful, of course, of the risks involved in trading these financial markets. And really, it's without risk, there is no opportunity for reward. So it's a case of embracing that risk and controlling it, which is far more important, especially for those that are very new and inexperienced to trading these financial markets. There's a lot of educators out there that will be advocates of trading without stop losses. I mean, that's crazy unless you actually really know you've got some significant experience under your belt. So without further ado, as what we always do really when we start trading these financial markets is basically have a basic understanding of what news events are likely to impact perhaps some of our trading. So for this, we can look at FOREX Factory. As you can see, we've had daylight time shift now over the weekend for most of us here in Europe. The days will certainly and the evenings will get longer from now on, which is good. So as you can see, we look for high impact news events. We have the impact here in this column. And what we're looking for is, largely we're looking for the red major news events. And as you can see, we don't really have a huge amount to deal with today. Tomorrow, there's a consumer confidence figure impacting the US dollar. Tomorrow afternoon, we can take a look at that. And just flicking through the rest of the week, on Wednesday, we've got some GDP figures. We've got Chinese manufacturing PMI data. We had a lot of the European and US data points out last Friday. So we'll see what the situation is globally. And there's just broadly speaking, there is growth. There is this kind of bounce back mentality as these economies start to reopen. Wednesday, we have non-farm employment change ADP numbers. So that's the prelude to Friday's event, which is probably the most significant event of the week. Now, it is shrouded in bank holidays for those of you in the UK, in Switzerland, and also in Canada and in Germany. So it is going to be a lighter market condition perhaps than normal non-farm payroll events, but nonetheless worth looking at. Okay, so by far the macro events are obviously dominating proceedings. We have the issue with the Suez Canal, the shipping container that was blocking the Suez Canal is now there's still some structural issues from what I gather, but at least now the canal can begin to reopen, and the cargo ship has now sort of refloated and things like that. So it's interesting to see what impact that's had on the oil supply, or sorry, the price of oil, should I say, because we'll have a look at their charts now in just a second, but very much up and down, sort of a lot of intraday swings without any sort of clear direction really from here. The final just news event I just want to draw your attention to really is on Thursday we have OPEC JMMC. So we'll be watching the oil markets quite carefully in the build up to this event, and we'll be looking at what comes out of OPEC, that OPEC meeting, with regards to sustaining the current restrictions that are in place. There was talk last meeting of tapering that to sort of start to increase the supply. They refrained from doing so. Now we'll see what, as the week unfolds, what the likeliest outcome is towards on Thursday, which also happens to be April the 1st. So we shall see. Okay, so that's some of the news. So let's get up our trading charts then. And just looking at that crude oil market, you can see it's we're now sort of breaking above this level. We're just beginning to close to the upside. And Finbar, good afternoon. Yeah, oil will go up. It certainly looks like that currently. Now, the blocked cargo ship is a concern with the blockade of crude oil getting through the Suez Canal. So that'll take a few more days, maybe even a few more weeks to kind of wind itself down. You would have expected a little bit more of an explosive move to the upside last week during that particular event. We failed to sort of see that price break and close above the 61.50, and as you can see, we're at those levels as we speak. So yeah, I would agree. We can do a lot of our analysis on this trade. If I just get up my pen, we've clearly been in an uptrend, so we're looking for buying opportunities. Prices just structurally rolled over to the downside, but we kind of created a bit of a floor around this level in here, which is the 50 period moving average, about the $40 level. And from here, there is every opportunity to continue to push higher. Just be mindful, we are trading below the monthly high, just up at these highs. So, if we come into resistance around these levels, don't be surprised. So you kind of want to weigh that up. It might be a pre-OPEC trade, i.e. between now and Thursday, and maybe look to get out to it if prices get up to $63.50. And you want to weigh up whether that will give you the return that you're looking for from a positive risk reward perspective. Okay, so yeah, it's stacking up like a decent buy opportunity. So let's see how we get on with that. So elsewhere, we being a Monday, we can do a little bit of a review in terms of where we're at with some of these markets. We do have our trade plan every Monday to Thursday night, so we can be super prepared for these opportunities. So it's just a case of Friday's pullback was a little bit concerning because we start to see some significant structural failures. So It just so happens it kind of failed to close higher to any great degree, and now today we've opened and we've started to sell off, and we're just trading around this little level in there. So definite euro weakness, just continuing this move. So we will be looking for further continuation to the downside. There's your high probability sell trade, and there's your follow through trade. We had a little bit of a pullback on Friday, and now we're looking very carefully at that level to the downside. So we can absolutely have a look at that euro dollar trade in a little bit more detail. So let's have a look at that. It's probably worth just having a look at the equity markets just to see what they're doing, because like I said, we take a multi-asset class view of these markets. And the reason for that is if we can determine whether markets are in kind of a risk on or risk off market phase, then it can help support some other trade ideas, like perhaps the yen or the gold trade or the US dollar. So we can see that there was a bit of selling. Friday's market conditions were really quite unusual. We had a very large amount of trades dumped onto the markets through Goldman Sachs and Morgan Stanley, and what we understand is it was margin calls were triggered. It's probably the size of the amount of block trades that were dumped onto the market, and the I suppose the secrecy behind it. But what was quite interesting to see something like that, and that has some financial impacts as really for some major financial institutions. But what we saw on Friday, which is a bit sort of counterintuitive, really, is just extreme resilience off the back of that event, and that always makes us a little bit uneasy. These equity markets are so unusual now. The Fed really have a bit of a problem on their hands in terms of how they can turn the taps off, because when that happens, that's likely to, we're likely to see a very, very significant correction. That would be our sort of, broadly speaking, that would be our view. But certainly over the short and medium term, it looks like rates are staying lower for longer, and the Fed have no interest in increasing rates until 2024. But let's see if the inflation story changes that analysis, and it very well may do. The Fed have already mentioned last week that if inflation gets to an uncomfortable level, then there is certain measures that the Fed can take in order to taper it, to bring it back in line. So not overly concerned about the inflation pressures. If you think about it, with the stimulus that's in the markets, the increased cash that's been injected, the money supply increase, the fiscal stimulus package, where every American has been given a $1,400 check to spend in the economy. All of these measures are just very likely to push prices higher. There is some structural deflationary pressures in the system as well. So it's a case of which one will play out. Is there an overreaction on the inflation story? Time will tell. But we're probably on Friday we probably reached the third highest price ever for the S&P 500. Excuse me. So for now, we can comfortably say that we are still in a risk-on market condition. That would be the prevailing winds. Let me see if I just get our squawk on in the background, just in case there's any sort of new market updates. Okay. So we're in a risk-on market condition. Prices are threatening to squeeze further to the upside after what can be described as some significant selling across many of these. The DAX has failed to roll lower. As you can see, it's just hung around those levels. But all the other markets have, for the Asian session, rolled to the downside and now seem like they're actually rolling back to the upside. And then Bitcoin as well, we're squeezing up to. It's interesting to see these levels in here, the 52,000. We really failed to close below that level, the 50-period moving average, just providing a little bit of sort of visual support really for Bitcoin. So we can look at the dollar trade then now with this risk-on environment and suggest that actually if we're seeing capital move into the equities, then it's reasonable to suggest that we might see some capital come out of safe havens. So actually the dollar, we might see some weakening. So it's just a case of looking for the higher probability trades as far as the dollar weakness trade is concerned. But you can see it's a mixed bag as far as the dollar is concerned. The dollar is strong against some currencies and it's mildly weaker against currencies like the pound, maybe the CAD, and the currency, the commodity currencies. So the Aussie dollar. But these are all just pullback off the lows. So when we talk about high probability trades, we don't necessarily want to.
That's Reuters citing sources there that Italy cuts their 2021 GDP growth forecast to 4.1 from 6%, however moves higher their 2022 forecast to 4.3% from 3.8%. It says the forecasts do not include the impact on the economy from the new stimulus package, which has been announced in April. So which will be announced in April.
Okay, so like there's, if we're looking for dollar weakness, we would need to keep a close eye on the equity markets because they look like they're going to be rolling back to the upside. So we've got to be careful about which of these markets we look at and which markets give us the better opportunities. Dollar weakness is probably a sell trade in the dollar CAD. And probably the New Zealand, just this little impulsive move to the upside. Those are probably giving us the better opportunities from the dollar weakness perspective. So we will keep a close eye on the euro dollar generally, but in terms of dollar weakness, we'll be looking at the dollar CAD to the downside and the New Zealand dollar to the upside. Okay, so one of the big moves really is this little impulsive move to the downside, and we're able to get into that trade a little bit earlier. I can see it's just squeezing further lower. So an opportunity exists to the downside for this trade. If I take you down into the smaller time frames, we had this strong little flush trade to the downside. So really what we were looking for is sell trades well below the monthly low, but we can see that we got this little flush trade and then the really strong continuation trade to the downside. So this really is the second opportunity lower. So there's an opportunity there to sell the euro pound, so we'll continue to keep a close eye on that. We're currently at the 85.06. So, and our stop loss is above the daily high, actually, what it turns out to be. It's just a technical level for us to use as a stop loss, so it's actually above today's daily high. We have the monthly low sitting in here. And again, we're very interested in markets that break above monthly highs or below monthly lows, because what it looks like on the monthly time frame is we can see that the direction of capital flowing into these markets, and we're going in line with those moves. So we're not looking to buy the lows, we're not looking to scalp, we're actually looking for the momentum trade, the continuation trade to the downside for the euro pound. And you can see breaking below those monthly lows can be, and if I take you back to the previous monthly low, can be, very, very significant moves. And that's what we spend a lot of our time looking for, is those types of consolidation market conditions that above the monthly high, just breaking up and down like this, until you get that conviction trade to the downside. And now we're getting some continuation trade again this month. So that's really why we're stacked up to the downside as far as the euro pound is concerned. We've had to be really patient around that 85.40 because it's traded around it for quite some time. So that's why this is a decent trade lower. We might get some sort of short-term sort of buying pressures come in as this market unfolds, but broadly speaking, we do want to be perhaps more of a short to medium term seller for the euro pound. So we're already in that trade, so that's a viable trade to the downside. So and what that fits in with is, broadly speaking, the euro weakness that we're seeing across the board. So just finishing off the flow of capital, really, we've got these risk on market conditions. So there's capital moving, I'd say, reluctantly towards your equity markets. And there's a lot anticipated really for this open today in equities. So we want to be nimble. We want to keep our options open. We don't necessarily want to close off any sort of equity sell trades by any stretch. Prices can turn and roll lower very, very quickly, and we'll be watching for both opportunities. So we will have a look at the S&P. We'll keep an eye on it, see what's happening with that trade. So prices are risk on, so there's capital moving into the equities. So we would expect to see some capital coming out of markets like the yen. So is the yen strengthening against the euro? The answer today is yes. However, the euro is actually quite weak as well. So these are two relatively weak currencies. You can see the pound strengthening versus the yen. So let's have a quick look at this trade. Okay, we're just breaking above that little level now. You see there's a lot of potential resistance up at these highs. And we're in the pound euro trade to the downside. So we'll stick with that for now. There is, a buy trade for the euro yen. Gold, we just want this market to just break out of this little zone in here. As you can see, an awful lot of up and down price action. So that's fine. If we get the concerted break below the 17.15, then we'll be looking for selling. And there's probably a relatively short-term buying opportunity. Mind you, this is our 1760 level, isn't it? So if prices break higher, we'd probably be looking to sell at actually a higher price. So we want to keep, again, both options open for now. And as it's moving sideways, we don't need to think about it too hard. Crude oil, we would expect higher from these levels. It'd be a short-term buy trade. So we'll have a look at crude oil. So what we'll do is we'll put together our little trade plan.
Spanish media reporting here that Spain's government deficit reached 10.09% of GDP in 2020.
Okay, sorry, I do have the squawk just on in the background, so we do get sort of up-to-date market up. We'll we do get market updates live and instant, so that's quite useful. Okay, so we want to monitor the euro dollar and the S&P 500. We don't necessarily want to get into these trades. So what I'll do is I'll just take those out of the equation just for a moment. We just want to see if the equity markets continue lower, or if the euro dollar, if the dollar strengthens significantly against the euro. That will be an interesting development for these markets. Crude oil. We can certainly have a look at this above the 61.50 level. See if we find a bit of a bid there in crude oil, and it would be a relatively short-term trade. Between now and Thursday, we'd be looking for prices to push higher. Very well, perhaps beyond Thursday, we have OPEC. So if they certainly maintain the restrictions they have in place on oil, we can certainly expect this market to continue to the upside. So perhaps a good buy trade there in crude oil in the build up to that event. Okay, so now for our out and out trading opportunities as such. What I'll do is I'll put the euro pound here, which we're already in. And you can see the accelerated move to the downside. And we'll put our dollar pairs. So this is a dollar weakness trade, would be the dollar CAD. Yeah, so we're actually looking for the rollover trade below the daily lows. That would be an interesting development for this market, and the New Zealand dollar as well. So let's bring that over here. So this is our trade plan for the day, effectively, and I suppose we spend a little bit more time kind of talking you through it in detail. So, and what we'd be looking for is that little impulsive trade. So we're no longer looking for that. Last week we were looking for continuation below that. Now we'd actually expect some buying coming in up to the 70-90 level. So let's see if we get that opportunity, and if the CAD rolls over. So we could have some interesting trades if the S&P squeezes to the upside. Meaning it's maintaining its risk on market condition. That we can expect some euro or some US dollar weakness, should I say. Let me zoom in here just a little bit more. Okay, so we'll change the color. So we're looking for actually a sell trade to the downside, perhaps down to the 24.97. We're currently at the 25.69. So perhaps a nice little rollover trade. And with this market, we're actually looking for this little move to the upside, perhaps up to the 17.90, and there is your sell trade for the euro pound. So this euro pound sell trade we were looking at last Thursday night. So as this market was rolling over to the downside, and we saw the potential move on Friday, but as you can see, we failed to kind of break quite important lows before the market actually closed above the monthly low. And then today we've got the follow through to the downside. So those are our 3 trades. I suppose a small potential buy trade in crude oil, and we're just watching the euro dollar and the S&P 500. Yeah, Finbar, I can see you do have a short, but you're thinking of getting out. Yeah, I would certainly probably agree with that. You see, this is your momentum trade to the downside. So I know you know this already. The 77.50 level, really strong 2-day move, but then Thursday's price action was really your. When you see indecision like this, what happens the vast majority of the time from a probability perspective is if prices break that level, prices generally start to retrace and reverse. Now, we'd look at to what levels this market is likely to retrace and reverse. It's probably in and around here, in and around this little zone, and it just looks like prices are breaking above that. So the next level would be up to here. So, you know, can you afford to cope with prices pushing up to the 76.98 level, and that should sort of give you the answer perhaps that you're looking for. So it depends where your entry is, and it does look like we'll get a bit of a short-term impulsive move. Now your trade very well may be fine over the medium term, i.e. we'll get another leg to the downside, but you're just trading that sort of secondary move almost, and you can see Thursday's price action bounced off the monthly low exactly to the note, and that's a bit of a warning system, because these monthly highs, it's resistance to the upside and it's strong support to the downside. So you can expect buying to come in at these lows and selling to come in at the highs. And that's exactly what's happened. So we were in this trade, as you know, I think on Thursday and Friday, and we got out at these levels for that very reason. We want the markets to let us know when we exit. So we go through a process for entry. We go through a similar process for exit, especially once we've mitigated risk on the trade. So objective number 1 for us, as you very well know, is to mitigate risk on the trade. Objective number 2 is to book in as much profit as we can, but let those winners go, and that's what we try to do here. Let the winner go, but you can see it just got held up. We're now seeing the pullback, so this is your key to get out of this sell trade at the 76.16 level, just above the 7600 level. Okay, so I would absolutely agree. Your entry was the 75.80 level. Yeah, so now you're offside. 75.80. Okay, that was your entry. So way down there at these lows. Yeah, that's a difficult entry price because the move had already happened, and under situations like that, I'd be much more comfortable getting in below the 75.62. If you get so close, you see what you want to avoid doing, and I can use this chart here, is that if this is the monthly high resistance, and if this is the monthly low support, some big support level, what you want to try to get into the routine of doing is avoid buying. Sorry, let me take it to the downside first. Avoid selling above a major level of support and to the upside. So let's say prices, continue moving like this. avoid buying prior to that major level, because it's a strong level of resistance, and what can very easily happen is the rollover trade. So if you get up to these levels, like we did down here, we got down to those lows. If you can identify the major levels of support and resistance, then it can stop you from getting into these types of trades. So selling just above, this major support here is not. It's something you want to perhaps address and have a really close look at, because it can just save you that little bit of pain, which you don't have to experience. Now, if you said to me, I've placed a pending order, perhaps a pending order down here at 75.60, for example, just for argument's sake, and you place your stop loss up here, then that trade makes sense, because it's a strong breakout trade to the downside. Yes, you might experience the false breakout trade. Perhaps 1 in 4, 1 in 5 would be a false breakout trade. Certainly more historically, not so much recently. We've had a large number of those, more recently. So avoid, if you're looking for the momentum trade, avoid selling prior to major support, and same to the upside. Avoid buying just below major resistance, and then you're able to stack the odds in your favor a little bit more, perhaps. And that's really what it's all about. It's about just fine-tuning your approach, and of course trading is all about decision making. It's all about making consistent decisions, and then it stops you from just being on the wrong side of trades like this, which can become quite frustrating. And we never really want to give trades the benefit of the doubt to the downside if our capital is at risk. So this is where cutting your losers short really plays a role. The level we got out of this sell trade and booked in profit was it was just above the 7,600 level. So that was our cue to actually look to get out of the trade. And then it saves this little bit of extra pain. There's no need to sort of accept that. Yeah, so it looked ranging and was looking for a breakout, but that's exactly the conditions for the reversal. So if you can imagine, the buyers are looking for that same. They're looking. They see this level and they see the support, and they're looking for the sideways moving patterns to actually get into the upside to capitalize on the buy trade. So and you can avoid that just by getting in below strong support to the downside, if that makes sense. Yeah, and I appreciate, it was sort of consolidating for quite some time. In fact, there is your entry, isn't it? That's your entry level. So you had this descending. Yeah, so look, it's an absolutely viable sell trade. The only problem we have with that is a major monthly level of support at the 75.62 level, and this market literally bounced off that exact point. And that's really why we use support and resistance the way that we do. It just navigates us in and out of these markets. And what price would we expect this market to come back to? First port of call is probably in and around here. We're just broken above that, so next level is up here. So actually there's a decent buy trade for buyers, and this is the psychology of these markets. This is how it can shift and change pretty quickly from a really strong, and don't forget, like, markets are just nothing more than a battleground between buyers and sellers, and below this level the sellers take control, and what you got to try and do is try and get involved in that sell trade as early as possible. But once this market fails to make that new low and break through strong support, then the probability starts to shift to the upside, and all of these sellers start to get out, and all of the buyers start to pile in and push prices higher. And this is market psychology in action. It's almost predicting and preempting what. If you're selling, you want to determine when the buyers are likely to come in. And clearly this is the current situation regarding the Aussie dollar. So they're now beginning to plow into it. So if I was you, I'd cover the position, I'd get out of it. If you take a small loss, so be it. You want to try to look to cut your losers short as quickly as you can, because when you get those winning trades, you want to try and let them go. And that's difficult to do in market conditions like this. It's not an easy thing to do. But you never know which market is the next big winner, and that's what's worth looking out for. Prepare for, I suppose, the market dynamics as best you can, and that can shift, and it can be very subtle. And this is why we talk an awful lot about structural failures to the upside and to the downside, because what we mean by a structural failure is a potential psychological shift in that market. So it's a structure in the market that technical traders will be looking at. They'll be looking at very, very carefully, and those levels are at points at which the psychology of the trade begins to shift, and we just refer to them as structural failures, and they can be higher and they can be lower depending on the opportunity. So we're getting that short-term little buying coming in. The higher probability trade is the New Zealand dollar. So we'll go and have a look at that now in just a moment. We'll bring this back. So we're currently in the euro pound to the downside. If anyone else has any trades you'd like us to look at, we can certainly give you our feedback on it, if nothing else. So what we're doing is we're just looking at the euro dollar trade price action on the daily timeframes and the S&P 500, just to determine whether we have this risk on, risk off market condition, which plays through these markets as we all know. The crude oil, we do like this market above roughly the 61.80 level. So we're I suppose on our watch list we have the euro dollar, the S&P, and the crude oil market. But in terms of trading opportunity based on this risk on, risk off market condition, then we're looking for the CAD to potentially strengthen against the dollar, the New Zealand to strengthen against the US dollar, and the pound to continue its weakness. The pound to continue its strength against the euro. So when you're trading foreign exchange, you're always wanting to trade strength versus weakness. Tristan, good afternoon. Hope you're keeping well. You're currently in a buy for the Aussie CAD entry, 96.10. So you're currently in that. Appreciate any input. Just a little tip, and I don't know if you do this already or not, but you're looking at the Aussie CAD. So if you compare and contrast the CAD and the Aussie with the US dollar, it can kind of give you a hierarchy of
emerging markets here.
Of opportunity.
The Chief Economic Advisor to Turkey's President Erdogan says Turkey is not considering any capital controls, soft or hard, and says the central bank targets inflation, not the exchange rate.
Okay. Okay. So Tristan, yeah, let's have a little look at that for you then. We've got a bit of time. We've only got a few more minutes till the cash open in the US, and we'll see how that capital coming into this market might create a bit of action for us. So yeah, just creating a hierarchy of strength and weakness, and don't forget, trading foreign exchange, that's all it is. It's finding strong currencies and trading them against weakness. So one way to do that is to compare it against the US dollar. So you've got that fixed sort of position in terms of the relative strength and weakness of the US dollar. So let's see how it compares to like the dollar CAD, for example. So we can see that the dollar has been, let's say, mildly strong against the CAD. So what we can do is we can probably put the US dollar in the middle a little bit, and we can certainly put the CAD over here. So just in today's price action. So this is a dollar CAD. Sorry, this is the relative strength versus weakness in the dollar CAD. Now just compare and contrast that with the Aussie dollar, because you're trading the Aussie CAD. You can see that the same market pegged against the US dollar is actually strong. So I wonder if you would agree that in terms of our hierarchy of strength versus weakness, the Aussie dollar is the strongest. The US dollar is sort of middle of the road, and by far the Canadian dollar is the weakest. So looking at the Aussie CAD, you are currently looking at a buy trade, and that absolutely fits with the sort of the analysis of strength versus weakness. So that's the first thing. And with that information, in fact, I'll tell you what, I'll just take it down for a second. Let's get your chart up, the Aussie CAD. Okay, so just bear with me a couple of seconds and we'll get this up on screen. So you want to load the template. So okay, so let's see what price you got into. In fact, what I would like to do is a little bit of, if I zoom out, do a little bit of technical analysis on swing highs, swing lows, and that'll give us a little bit more of an idea in terms of what we're looking at. And then more recent lows. So you can take more, you can take a few other levels like this. So really we can see that this market, I can take that away. So we're firmly looking for Aussie CAD, and this is certainly the market analysis for today's trading. So markets are moving from bottom left to top right. So you're actually trading in line with the overall momentum in this market. However, something significant has occurred here, because we've had one structural failure to the downside, followed by two structural failure to the downside, actually followed by three. So we've had three structural failures to the downside. This level is a strong level of potential support. It's a bit messy in here. So what we often say is, like, any potential support in and around this kind of zone, okay, it might be, I don't know, 100 pips maybe, but anything around this little zone might actually give us a bit of a platform for some buying. So, and that's really what we're seeing. So the outcome of this one particular trade, Tristan, is not too important, right? And that sounds really counterintuitive. I appreciate that, because what we would look to get into is the fact that this market bounces off the low, and we want to see a failure to the downside. That's what creates turns this trade into a high probability buy trade. So we've just got a lack of data at the moment, and the problem with looking to buy at this level, although it's the correct trade currently, is that you're running into strong levels of resistance. So there's a pocket of resistance in here, and you're trading right into that resistance. So, and like I said, just taking the success or relative failure of this one particular trade is not too important. It's the basic principles of this market is short term pushing lower. So actually, we'd be looking for the next leg to the downside, and continuing this little path. So
UK PM Johnson's spokesman here says that the country remains on track to deliver the roadmap on easing lockdown.
So we're getting those conditions improve in the UK now. So can you see this type of sort of bit of price action? That's what a lot of traders will be gearing up for right now. So what changes that mindset? It's the structural failure trade. It's when, if you can imagine, if you're a seller and price has failed to break these lows and starts to turn around, at this point, when this market breaks that level, that's that sort of psychological shift that occurs in these markets. And there is your probability trade, not necessarily at any particular one trade, but over like 100, 200, 300 trades. You know, these trades turn out to be your high probability buy trades, as opposed to the buy trade which exists. It absolutely does, but the chances of success over a long number of trades is just not as high as better quality trading opportunities. But does that make any sense to you? So you got in at a 96.10. So let's have a look at the actual trade. We'll have a look on the hourly. So 96.10. I'm just looking at. So there's your structural failure. There's your major structural failure trade to the upside around the 95.90. And then it's just been grinding higher ever since, hasn't it? So, but this is support and resistance. This is there's a strong level of resistance just above these levels. So the momentum is very much. So what we do is we want to trade in the direction in which the market is moving. So if you said to me you were looking for a sell trade in this market, the level that I'd be looking at to sell this trade would be in and around this type of zone here. I'd be looking at these levels and I'd be suggesting, yeah, just want it to squeeze a little bit higher, show a bit of exhaustion, and there's my high probability sell trade. And that's in keeping with the overall market structure and, you know, the more recent price actions pushing lower. So I'm looking for a selling trade only, and I'll be looking to get in to the downside, maybe around these highs if the market performs as per expectation. There's an argument to just make that level a little bit lower. So this wouldn't have too much further to go to the upside. So, okay, awesome, very helpful. Glad I came across your page. Amazed there isn't more people in here. Yeah, a lot of our traders get access through their members area. So I mean, we've only just started this as well. So the Aussie CAD, we're a very sort of small entity, Tristan, so far. We'll be growing it sort of organically, so we're not in any rush to any great extent. So very welcome to join us, and we're here Mondays to Thursdays at the moment at 12 noon. So feel free to join us completely free of charge. And if you want further help and assistance, we can do that as well. So just go to a website. The details are there up on screen, and we can help you to a much greater extent as well. Okay, and in fact, on that note, in about 10 minutes, we do have to switch across. We do have other. We've got sessions with our members as well. So the 96.30. So really, for that trade, Tristan, I'd be looking to take profit up at these highs if I was you, or at least if price starts to roll back to the downside, then that's when you're likely to see that little pullback trade begin to kick in. So you got in at 96.10. Do you mind me asking what your stop loss is? Where have you placed your stop loss? Would it be sort of swing low, the 95.29, 95.30? Probably a little bit higher than that, maybe. Okay, so let's see how these trades are playing out. And I suppose just to sum up, Tristan, there's a difference between a trading opportunity and a high probability trading opportunity. Obviously, a higher probability trading opportunity, it has to meet slightly more criteria than just any particular trade. But I suppose there's a method in the madness. So dollar CAD to the downside doesn't look like it's a viable trade just yet. So we're looking for that little rollover trade to the downside. This is all your consolidation in here, and the break below the daily low, the 25.60-69, would be quite an important. Again, the psychology of those buying this market would be looking to exit those trades around that price. So you might see a nice little swing further to the downside. Same situation, New Zealand dollar, just to the upside at the 17.90 level. So there's a little bit more upside in the New Zealand dollar trade. And the trade we're already in is the euro pound to the downside. So just give the euro pound lots of room to continue its move to the downside. We don't need to necessarily see an instant return today. Give it a bit of time. There's no rush with that trade. Just looking at the euro dollar, like we're getting a reversal of these lows now. So, you know, that dollar strength trade still might be a viable trading opportunity. And then the S&P 500, it's actually trading at the monthly high. So we're very close to all-time highs. So you could argue actually, you know, we're in this kind of risk-on market condition. So we'd expect the flow of capital to come out of some of your safe havens and into more riskier assets like your indices and your stocks and shares. Yeah, so Finbar, the Aussie CAD 1 hour is hitting ascending trend line. Yeah, you'd be looking for a sell. Yeah. Yeah, let's have a quick look at that. So on the trend line. So this is that ascending trend line that Finbar's talking about.
For me, sometimes the reflection is far more present than the thing being reflected.
So it's not drawn brilliantly, is it? Okay, so the idea is that this market is likely to continue higher until it breaks that particular trend line. Top left to bottom right. Okay, to the downside, you mean? So there's a few trend lines you can put in here. Like that's a more sort of short term one for this trade. So broadly speaking, there's a more medium-term selling trade. So this is again just another reason. We also have the horizontal level of resistance, but it's another really strong level of resistance at this level. Now going back to my initial understanding is at what point does this sell trade become a buy trade? Well, if prices just start to roll over and then we get that structural failure trade to the upside, so you're breaking out of this range, you're firmly breaking out of that range, you're breaking out of the horizontal, and then that's your high probability sort of buying opportunity. So buying in here is a short-term buy trade, absolutely. I'd probably be looking to take profit, certainly if it was myself, around this kind of level here. It does depend, obviously, where you place your stop loss and things like that. I mean, you could actually follow your stop loss up if you wanted to. So, like breaking even around your 96.10 and then look to let it go if you can. And if it kicks on, brilliant. And if it rolls back and stops you out for a break-even trade, then perhaps no significant harm. I certainly wouldn't be holding this if this prices were squeezing below 96.10. But then the structural failure, you'd be able to get back into the upside once more. So I suppose that's just how we would look at that bit of price action. Your trade is absolutely supported on the daily time frame, absolutely, because that's one of our other rules, is that we look to trade in the direction in which the market is moving, which is to the upside. Okay, so let's round this up. I do apologize, I've got to shoot off in 3 minutes. So the New Zealand dollar is probably the best opportunity so far today for us. So let's have a quick look at this just before I let you guys go. So we were looking below this. Oh, that was on that was on Thursday, I think, wasn't it? Okay, so the New Zealand dollar trade, it's just breaking these levels here. So let's go in and see it on a. So there's our level, the 70 level. There is your close above that important level, and now we're just anticipating the follow through to the upside. So we can look to get in actually at the 70.11, and where would we place our stop loss? That technical level is probably a little bit too tight there, as you can see. So we'd probably look for this little structural level in here, the 69.68. So it does mean 30, 40, sort of a 45 pip stop loss for us in this trade. So again, we talk about making sure that we stack the odds in our favor. We got the close above the important level, the 70. This is a very important psychological level in these markets. We sort of close above that level, and now we're wanting to see the follow through above the 70.11. if that happens, then there is your trigger to get in, and what price we like to trade this to. It'd be a fairly short-term buy trade up to the 1790 levels. So, you know, a 90 pips to the upside, 40, 45 pips stop loss. You're talking about a positive risk reward of 2 to 1. We always trade positive risk rewards. We never trade a negative risk reward. It just keeps the odds on our side. But we cut our losers, but we let those winning trades go if we can. Now, this wouldn't be one of those winning opportunities to let go, because we're going to be running into those very, very strong levels of resistance up at these highs. But exiting around this sort of level, absolutely fine. Book the capital, book the profit, and hopefully that will turn out to be a good trade. So just on the 15-minute, we got the breakout to the upside. And we're just even on the 5-minute. So we just want this price action to just roll above the 70.11, and then look to place our stop loss beneath this little structural low in here, the 69.68 level. So let's see how we get on. So we might be getting into this now over the next few minutes, and those of you that are members of the live trade room, we'll be posting it through our Signal service now very shortly if we get that follow through. So you'll be notified of that trade when we get into it. So it does look as if that dollar weakness trade is probably the only trade of the day. The equities are in a bit of a strange place. They're kind of close to all-time highs, but you know, showing a bit of negativity. We had those block trade issues on Friday, so we're looking for the market open now in the US in just over an hour's time. So the best trade really is likely to be this dollar weakness trade. So we'll see how we get on. So listen, on that note, guys, thank you very much for joining us. I hope you found that useful. Tristan, if you happen to be still with us, we'll be back again tomorrow at midday. So feel free to join us again if you can. And for those of you that perhaps do want extra support, we've got a whole range of products and services available over at the live trade room. Very, very low cost involved. We trade the markets ourselves as well. So the cost can be remarkably low. And that's if you want that extra sort of daily support with live trade rooms and our trade plan webinars and things like that. So you can go to a website for more information. So look, I'll leave these on. We're just going to be watching this very closely. We might get into that now very shortly. So look, thank you very much for joining us as always. Do take care, and we'll see you tomorrow at 12 noon. So from everyone here at the live trade room, thanks very much for joining us. Do take care, and we'll speak to you soon. Bye for now.